Okay, let's have a look at the quality analysis of CBOE. We have a special table. I'm not going to go into details how to analyze it, but we'll look at different parameters. So industry ranking, as I tell, it's the best. Timeliness also was the best. Safety, it was very good too. Debt, very low debt. Beta, that's where value line, like we gave the worst score, but maybe I actually have to change it because I believe that volatility in the current market, when the market can go down, it's actually better thing. And the growth trend, it's constant growth, not consistent, but still growth. Okay, and the management is fantastic, constantly keeping an eye on what's happening in the market. So, and from the price perspective, I'm going to explain for new members the way of thinking, how it works, in order to understand where we get these price projections. So can you imagine that these are the highest prices for the last 5 years, and these are lowest prices for the last 5 years. And these are actual earnings, $2 to 20, 360, etc. Right? So what we do in this particular case, we calculate the average. So we take the average highs, we add them together, and then we calculate the average, like total price, calculate the average price, then deduct it. And we come up to the number 34. So it means that at the highest point during each year, there was a highest point, people were willing to pay 34 times higher for $1. Okay, for $1 of profit, they were paying 34 times. Now, if we take the average low and calculate it and add it and then deduct it, divided by earnings, so we come up to the number 23 times, 23.4 times for $1 of profit. So you can see the huge difference. It's nearly 50% difference. For same profit, for exactly the same profit, right? People at the same year, sometimes they pay when everything is rosy, there are good news in the market, people talking good about companies, no bad articles, nothing happens, people are paying as high as they can. As soon as something happens, bad article, some kind of investigation, lawsuit or something else, people are willing to pay less and it drops to 23 times. So that's the low time. Okay. So based on that, what we can do, we can expect, all right, so if it happened during last 5 years, and if you want, you can extend it to 10 years and you can calculate average for 10 years. So we can expect exactly the same thing in the future. Right? So we can expect that sometimes when everything is going to be rosy and nice and fantastic and beautiful about this company, people are willing to pay highest leverage, like ratio, 34 times of their earnings. So we need to know what kind of earnings are going to be in the future, right? And they are planning to have $7. So it means that if they're right, if the company is right, and they're going to make $7 in the future, so and people are willing to pay 34 times of their earnings. So we can come up to this number, 34 multiplied by 725, it's come up to 225. Now the question, where did I get this $7, right? So usually the companies, they give us projections. And you can see that value line here is writes down that within the next 3 to 5 years, the bold numbers, the company planning to make $7.25. We already know that company usually under-promise and over-deliver. But even if we take into consideration this $7.25, multiply it by highest level, so we can expect that sometimes within the next 3 to 5 years, the price might go to $250. And at the moment, price is $93. So at the same time, we have to do the worst part. Okay, so what happens if the company will have bad news? If the company has better kind of like reputation issues or lawsuits, product issues, whatever happens, right? So business kind of problem. And people are willing, in this particular case, during that period of time, they are paying the least amount of money. And the least amount for the last 5 years was 23 times. So what we do, we take the actual earnings. we know how much companies already make it. We know that their earnings don't go down a lot. So we take into consideration $3.3, right? And multiply by 23.4. So, and we come up with the lowest amount, $78. So it means that if the earnings stays as last year, $3.3, right? And don't go lower than that, stay on that level. And we multiply at this lowest multiple. So we come up to the price of $78. At the moment, the price is $93. So it means that potentially our company can drop to $78. We buy it now, for example, for $93. It can drop, what, $15? Or it can go to $252. So this is the area where the company can have a move within the next 3 to 5 years from $78 to $250, right? Now, for us, this question, if current earnings this year, company already increased, they're already making more money than last year, they are promising to make $4, it's already half year through. So if they're right, and if they're making $4 this year, we multiply 4 by 23, we come up to what, $86, right? So this number is already going to be higher. Did I calculate correctly, guys? 4 by 2, it's 80, 4 by 3, 12, 90, $94 actually. Yes, something like that, above 90. You can use a calculator to calculate it. Replay when the time limited replay. Would you appreciate if you get direction on what basics video we need to watch so we understand the better what investment program this is like that? Okay, I will take this. Okay, I'll explain it a bit later. So do you understand, guys, how we come up to those numbers? And what we do after that, we just can assume that this is the highest price possible, this is the lowest price possible, and we can think, okay, 30% of the time the company is going to be closer to the highest price, 30% somewhere closer to the lowest price, and 30% in somewhere in between, right? So that's why we put this is a buy price between 78 and 130. This is the hold price. This is the sell price. That would be actual valid for long-term investors, not for short-term traders. This table is for long-term investors. So that's why if we look at the current price, which is 93, it is in a buy area. So that's why we can call it undervalued company. With the current overvalued tech stock. How do you cater for volatility in this analysis, especially with the current overvalued tech stock? So you can see that this particular company, if you compare to the NASDAQ price, who remembers what's the PE ratio was for NASDAQ? Current PE ratio. Who remembers it? 33, right? So somewhere there. So 33. What's the PE ratio here? It's 23. So generally, if we compare with the market, it's undervalued as well. It means that some companies, because 35 for NASDAQ, it's average. So it means that some companies, they could be in PE ratio of 40 or 45, much higher. Because those companies kind of, they're on news, people know that. I can ask you guys, did you, before this presentation, have you known about this company? Have you heard about this company? I presume everyone heard about Apple or Facebook, right? Everyone knows that. But CBOE, people just don't know that. It's not the company which you have an idea to buy in the first place. It's great that you did, but a lot of people, they didn't know. They say like, oh my goodness, really? I can buy the market? Oh, wow, cool. I never thought about it. Right? They know that they can buy Apple, Microsoft, all these shares, but they don't know that they can buy the market. Okay, so this is kind of interesting thing. All right, so that's how we understand, and we get practically the highest score, 48, because if it is between 40 and 52 on our guide, we have a special table. And as Mana mentioned in the chat, we have a program, education program, where we show how to analyze that. I'm not going to talk about this education today. If you want, you can attend another meeting where I'm going to explain about this education, and etc., etc. All right, this part I showed you already. Another thing which I wanted to show you about ownership. Look at this ownership. This is yellow line on the top is the insider line. So it's how insiders own, how many shares insiders own. That don't own that much, only 1% of the stock. But bigger company, look at this, Vanguard, 10.9%, BlackRock, 10.9%, 8.6%. By the way, I'm wondering why 10.9%. Maybe it's some kind of regulation that they cannot own more than 10%, 10, 11%. Maybe they have to get some licensing, etc. So that's why they do like that. And institutional investors own 63% of the stock. Actually, I can see this because this is orange line. We can see during this pandemic time, they sold quite a lot. They owned much more than 125 million. And we can see that's dropped quite a lot. And majority, probably the reason is a lot of institutions, they have rule, policies and procedures, and they have to sell stock regardless if they believe it's good or not because of those procedures. So if the stock, for example, depreciated 5% or more, they have to sell it regardless. Okay, only companies like Berkshire Hathaway can hold the stock forever. Okay, even if it's dropped a lot. Okay, and another thing which I wanted to show you that you can see that only one sell happened in July 2019. So insiders, they don't sell the stock. They keep the stock. Nobody wants to sell it. This is kind of good news for us as well. So, okay, guys, can you please put from 0 to 10 because we completed the fundamental analysis. So what we've done, we analyzed the company based on its financial reports. That's how we always analyze any businesses. We never buy any business without looking into details, what they're doing, what the performance, etc., etc. Now, William asked a question, if I remember, William, I think, asked the question about that we not to know the reason, right? If I remember correctly, yeah, so maybe it was David, why it's dropped in price, correct? And I want to show again, maybe for a second, what happened last year. And let's have a look back in report. You can see the price here, the earnings in 2018 to 2019. That's where the slow, it didn't drop a lot, but it's kind of slightly went down. Why? Because the earnings went from $3.76 to $3.36. So this is the main reason for, because when the earnings are going down, a lot of hedge funds, institutional investors, they have to sell the stock. Because in their policies, if the stock is not making constant growth, they have to sell it. For us, important to understand, is it a temporary drop in earnings or consistent? And the reason, they sold part of their business. A couple of years ago, they sold Chicago, they sold a trading platform. I was in a CBOE, I had the account and I sold it to Charles Schwab. So they sold part of their business, which they are not running because they are not brokers. They don't want to be brokers. They want to be exchanges, right? So that's why they sold the brokerage company to Charles Schwab and kept only the core business. So that was a slight drop, which it's not consistent reducing the price, but that's affected the price in this particular case. This is my opinion. Maybe I'm wrong. I have to analyze that. The best way to do that, if you want, what you can do, you can go to certain companies like Value, for example, Seeking Alpha, and find the articles on the moment when a drop happened. And there would be reasons they described for that particular, or the best thing to do is to read reports, financial reports for the last 2 years. That would be 8 reports where you will see the exact reason why the stock dropped. Directors, they will have to explain that. How to buy stock using a broker? Yes, Hannibal, you go and buy it using different brokers. If you're located in Australia, there are quite a lot of good brokers here. If you want to trade US market, we use Interactive Broker, but you can decide what broker to use. It's up to you. Yes, it is a fantastic model. Do you know like capitalization of Warren Buffett company, Berkshire Hathaway, and how many people work there in the office? 12 people, yes, 12 people and $360 billion capitalization of the company. Actually, it's funny. If you go to Berkshire Hathaway website, have you ever go there? If you go there, there would be written, if you're trying to reach us over the website, you might not get response straight away because we have limited amount of stuff and we are not able to reply to everyone. So something like that, the message on the website. Okay, guys, were the chart manually constructed from reports all over the years? Or okay, so David is asking, were the chart manually constructed from reports all of the years, or there are some ongoing this kind of 10-year analysis? Very good question, Daniel. There are different platforms where you can get information, and every company provides financial reports. It's completely free information. You can get it from their website or from regulators. In America, it would be SEC, Security Exchange Commission. And when you get there, usually it's 2 to 3 years. It's raw financial statements, balance sheet, cash flow statement, income statement. Now, it's quite difficult to combine them and analyze quickly, right? So it takes quite a lot of time to do that. So that's why some services like Value Line, Morningstar, Guru Focus, quite a lot of them, what they do, they kind of do this work for you. So they get all these individual reports and then compile them in different tables, like Value Line, for example. And when we open Value Line, we instantly see information for the last 10, 15, sometimes 20 years, right? In some resources, 30 years. It's very useful for your speed because you just open it and you can see straight away how company performed over the years, right? It helps you a lot, saves your time, but you have to pay for this because those providers, that's how they make money. They compile individual, single, independent information into one spreadsheet, which is useful for investors in a glance. Okay, that's why I pay for Value Line. The price for Value Line, if you go directly to Value Line, from $700 to 750 to 1,500 US dollars. It depends on the time. They have promotions and without promotions. We pay it through the network of investment clubs, and we pay for this 350 euros a year. So it's half of the price what if we go to directly for this particular case. If you go to different analytical sources like Morningstar, it would be roughly again from 750 to maybe $2,000 for analytical. So if you just start in investing, sometimes it's very difficult to pay that amount of money. So it's much better if you use the free sources, and there is quite a lot of information on free sources as well. The only you have to know how to analyze it, raw data. Okay, so something like that. Now, interesting in a beginner class for fundamental analysis. We'll probably let's do it next week because today is, and I will explain you in details how to analyze this kind of companies. Today you have a very good example how we analyze it already. Maybe it took me a bit longer to explain because now it's already nearly close to 2 hours, right? So we're talking, usually it takes an hour to go through, but because there are quite a lot of new people, so I explain it in more details. So Mladen, first time here, more familiar with technical analysis, first time here in fundamental analysis, interesting in beginner's class. Okay, great. And Tony Robbins also has higher revenue to staff ratio, good to keep in mind. David, when is the next day they pay the dividends? All right, very good question. So if you go to, I recommend you the company called TradingView. You can go to TradingView, and there would be information about earnings. But also if you go to Yahoo Finance, NASDAQ, there are a lot of platforms. They will have next earning dates. They usually provide this. I have this information on my brokerage platform, Interactive Broker, so I can go there and have a look. At the moment, it's just closed while I was talking. It's restarted, so I cannot tell you right now. But usually, it's there, right? Then free resources don't have the reports or value line like sources, but still a lot of information risk. Hannibal, I would definitely recommend Interactive Broker. Like you can use different brokers. It's all based on your own circumstances. If you're going to trade only Australian market, you might open some Australian broker. But if you're going to trade US market, you might consider Interactive Broker. Pretty good one. So if we bought shares now, we can get the dividends in the next day. So usually, interesting question, David. What I'll tell you, in reality, in order to get dividends, you have to own your shares only one day. It's called dividend record day. When the company actually, what they do, they look who owns the shares at that specific day. And if you own your shares on that specific day, you get dividends. So it means that you can buy day before because brokers send information about your ownership on the end of the day. So for example, if you buy today on the 21st, they will report it only in the end of the day. So, and they come, then you get into the company's profile, right? So the company, if they tomorrow look at their own company and they see who owns it, you own the company, they pay you dividends, you already can sell your shares tomorrow. Okay, that's how it works. Okay. I actually have on the website, even if you go to YouTube channel, you will see I have a description of Interactive Broker there. So there are pluses and minuses. What I'll do in this case, do you want guys a recording? In this case, what I'll do tomorrow, I can compile it. We haven't completed it yet, and I can resend it to you if you want a recording and where it's going to be saved. Okay, it's only a few minutes left. Let's have a look at technical analysis, guys. This is another way to analyze the stock, but mostly the price of the stock. Okay, and where to buy. And majority of traders, they use it. So even your fundamental person and you're using like your decision based on fundamentals, it's still good to know how traders, technical traders think, because it helps you to understand. This is the peak. Remember, in 2016, company announced that they bought these network exchanges in United Kingdom, and after that, they increased their income quite a lot, and then we had slight drop. So that's what we can see. The peak was in 2018. It was $137, and then we can see this kind of waves. Okay, this is. So I put this line as well because we didn't reach the top line all the time. So a couple times we kind of bounce here. We can see one roll, two roll, and now it's kind of third roll, right? And in between the big one. So at the moment, we kind of rolled up until this middle line and then bounce back. And if we look at this level, $93, it's already touched it several times. 1, 2, 3, like nearly several months bounced here, and now again at this level. So usually guys who trade on technical analysis, they will pay attention to this level quite a lot. It's called strong support. It means that it's likely will bounce it from here again. So if it breaks through, most likely it's going to stay in this trend. It's called trend, up and down, parallel trends, and it can go to around this level, which is $78. And guys, who remember when we identify by fundamental analysis, what was the lowest price? It was also $78. So based on fundamental analysis and on technical analysis, this situation might happen or can happen. So to go to $78. So, and at the moment, the market is so high. And if the market goes down, So, for example, Donald Trump announced that he's not going to support economy and or maybe reduce this amount of spending. So something happens, right? It triggers the fall. It will drag the price of this particular stock, regardless if it is good or not, even if they are going to make more money, and they are going to make money. The more trades happen, they're going to make more money, but while they're making more money, the price of this particular company will go down. Okay, and which will give us an opportunity to buy this fantastic company, right? So we can see indicators here. I'm not going to explain the details, but here RSI is kind of neutral. Stochastic is an oversold situation, so we might expect people buy. Here is a neutral as well. So here it's not clear exactly this is a weekly chart, so one candle is 1 week, so not exactly clear where it's going to go. So usually what we do after that, we kind of zoom it up, and that's what we can see for the last 1.5 years, from 2018, the beginning. So we can see the slight drop down, not that much, right? But still, with 20% drop, even more than 20% drop. So this is the drop happened on the news about coronavirus and about all these quarantines, right? So, and bounced back, and now we can see it one roll, second roll, and here it's bouncing. You can see from this level, it's already bounced here. It's already bounced here several times, right? Hold it up, went through this one, but I would probably won't take it into consideration because it's generally for all the market, and then quickly went to the same level and bounced several times here. So I presume this $90, it's around $90, it's quite a strong support level if you you base your opinion on a technical analysis. All right, so in this particular case, we can see that indicators already bounced from down and kind of started moving up. Here bounced and started moving up. Here bounces already turned around. Okay, so we can see that already move happened here. It's on the daily chart, and this is earnings. So if you go on this platform, you can see where the earnings are. Okay, when they announce their earnings. And this is 30-minute chart, so it means that one candle is 30 minutes. So we can see this small area, okay, on the last part. The reason why I'm showing you in this particular case, because I can believe, okay, fine, this is the drop which might happen, this is the growth what might happen based on technical analysis. So from $93 to $80, or from $93 to $122, right? Or maybe even $40 here. So based on technical, so I can see it. That's first thing. Secondly, I go more precisely and I can say, okay, fine. Again, it can be 78 or it can be 120 based on that. And here identify the best entry point already. So I can see that one roll bounced from 89.91, so $90 here, bounce once, bounce twice, like went up to $93, and now it's testing this area. You can see it's already tested here. That was a support here, then again tested this area. So this $94 is kind of a resistance here on the 30-minute chart. So if it doesn't break through, so it's very easily can return to somewhere around $92 here, or if it breaks even lower to $90. And if I pay attention to this particular company, I might consider one of these levels in order to enter. Some of our members, they prefer to trade on a breakthrough. So when they see when this level is broken through, it means most likely it's going to, like here, for example, you can see it's broke through, tested it, and then hop, move to the next level around $97. So if the same situation happens here, it breaks, it's already broke through, tested it. If it breaks through, it's most likely going to go to somewhere $96.50, $97. So you can do this $3 quickly profit, right? If it doesn't hold this level, most likely it's going to bounce back down. And then when it turns around, when we see this candle, when we see this move, we enter the position. So this is how it works generally. Now, I already practically told you everything, guys. Can you tell me, for example, if you decided to trade the stock, okay, only if you decided to do that, can you tell me what would you do? At what levels you would buy? Because we'll look at technical analysis, fundamental analysis, and at what levels you will sell. every trader has to learn how to make their own decision. If you rely on somebody else's opinion, it's very bad, because as long as you rely on somebody else, it means that you are going to make money based on somebody's opinion, and as soon as that person disappears from your life, that's it, your income will stop. Okay, so in order to avoid it, you have to make your own decision. That's why, guys, can you please put where would you buy, where would you sell? Okay, Nona, 1994, so it means that from this level to here, Sarah from 90, after earnings a price not lower than 90, maybe sell a put at 90 strike. Okay, 92, 95. Okay, 9100. Okay, we can see first value investor, long-term investor. Okay, great. Okay, great, fantastic. Might buy now, not sure, it might drop a bit. Okay. It might drop a lot, David. It's not necessarily, it can go to $78, right? So it's nearly what? 15% drop, so it's not nice.